Hello, folks. It's Monday, August 26th. It's about 8:15 in the evening on the west coast of the United States. In this video, we will be exploring GDX versus SPX, the gold mining stocks, gold and silver mining stocks versus the overall market. And let me share my screen here and we'll get going. And this is an article from the past week. It was published on 321 Gold. And if you're not familiar with 321 Gold, this is Bob Moriarty's site. It's the best website I've found for gold, silver, and the mining stocks. And so this article was on Bob Moriarty's site, 321 Gold, in the past week. The article is by Bob Hoy. He doesn't post frequently, but he does provide interesting information. And so I always read his content when he publishes it. In this article, he's talking specifically about the exploration, the small cap mining stocks, and suggesting that they could outperform. And then what I keyed in on and what we're going to look at in this video is the idea that GDX could outperform the S&P 500. And it occurred to me as I was getting ready for this video that, well, the GDX, that's not the small cap stocks. So, GDX is the gold miners ETF, and then GDXJ is the junior gold miners ETF. And even in the GDXJ, which, it's got junior in its name, if you look at the components of that ETF, they're not small cap stocks by any means. There's several stocks in the ETF that are multiple billions of dollars in market cap. And in my mind, small cap mining stocks are well under $1 billion in market cap. And then the exploration stocks are, 300 million and less. When an exploration stock gets up to 300 million, you might not be calling it a junior anymore. So, but anyway, that's kind of off on a tangent. Let's keep rolling here. So this is just, going on what Bob Hoy said in his article, GDX versus SPX, what's that look like? And here it is. We're looking at, basically that's 3 years worth of action here in this chart. We can see, gentle downslope with some fluctuation, but overall down. The primary trend in this time frame, this several years, is to the downside. Mining stocks, as represented by GDX, are underperforming the overall stock market. Being invested in mining stocks right now, that's not a great place to be. If you have a portfolio of mining stocks, I'm sure you can relate to that. Now, if we focus in, on the last couple of months, we do have some outperformance of the mining stocks over the broad market. And of course, that's because, gold has added $700 to its price in the past year. So it makes sense that some of the gold stocks are outperforming the overall market. And that's why in the last two videos, that's why I was looking at the large cap silver and gold mining stocks. That what did they look like on an individual basis before we went and looked at GDX as our proxy for the overall mining stock sector relative to the broad market. And so based on MACD, MACD in bull mode on buy signal, I always say that when it's appropriate, energy is elevated. So not only do we have some outperformance in the mining stocks currently, the primary trend there is to the upside. So back in, what was this, 2021, we can see, well, going into 2022, we had some sharp outperformance, but didn't last long. This was most of a year, so about 9 months of outperformance. Looks like we're getting another period of outperformance. I wanted to look at a longer time frame, and GDX is relatively new. It doesn't cover it. It didn't exist back in the 2002 to 2012. GDX wasn't around during that bull market. And so I switched from GDX to the UE, which is an index. That's the Gold Bugs Index, which, it's an interesting name for a stock index, Gold Bugs, but that's the UE. And so in the current action, the last couple of years, basically it looks the same as GDX. Whether we look at GDX versus SPX or the UE versus XPX, basically the same thing. And of course, as gold stock or mining stock investors, this is what we'd like to see, is for some dramatic outperformance of the mining stocks relative to the overall market. And that's exactly what Bob Hoy is suggesting in his article, is that we may be moving into an environment where the mining stocks outperform. And so this is the current action in the UE. This is the interesting chart to me. This is going all the way back to 97. Gold bottomed at 252 back in mid 1999, and we can see that during that time period, the mining stocks were underperforming the overall market. But then here in 2000, that behavior changed. The mining stocks started to outperform, and obviously dramatically outperformed for the next 10, 11, 12 years there. And one of my many blessings during this time frame, I was a subscriber to Richard Russell's newsletter, and rest in peace, Richard. I think I must be getting older. All my mentors have died. That's not a good thing. But anyway, throughout this time period, Richard was telling his subscribers that, don't try to trade in and out of the mining stocks. Basically buy and hold, dollar cost average. Every couple of months, when he was buying, he would share with his subscribers, hey, I'm buying these stocks, and he'd list, 5 or 6 stocks that he was going to buy. And at the time, they were the well-known names. He wasn't investing in juniors, or at least he wasn't sharing that. If he was invested in juniors, he wasn't sharing it with his subscribers. And so, it's like KGC, Ken Ross, and Barrick and Newmont, and Wheaton. Those were the kind of stocks that he was recommending. But the key is that he was, as a conservative advisor, he was recommending to his subscribers that they dollar cost average. Don't try to play the stock markets. Just buy mining stocks. Trust me. I guess that was the basic message that Richard was providing for his subscribers. And then, he gave appropriate notice when he determined that the bull market in mining stocks had ended. And so if you followed Richard's advice during this time period, you did very well. So here we are in the recent or more recent years. Obviously that bull market ended in 2012. We got a big bear market that bottomed in 2015. There was a very brief rally in the mining stocks. It was 7 or 8 months. I mean, it was quick. And that's what we see right here. We got another gold bottom at 1085 back in 2015. And so what we'd like to see is this kind of action. We'd like to see gold bottoming and then the mining stocks start to outperform the overall market. That's not what we're seeing in this chart. We're seeing that the mining stocks are continuing to underperform the overall market. This pink channel here, that's what we were looking at in these two charts. Basically it's 2020 to today, same time frame there. Well, there's that period there in the pink channels. And so, that is dramatic underperformance of the mining stocks and nowhere close. Even if we get a breakout like this from the current action, which that will be exciting, if we get a breakout above this channel, which will indicate, the mining stocks once again are outperforming the overall market. But even with that breakout, relative to the big picture, the mining stocks are still horribly underperforming the overall market. And you see occasionally you'll see people talking about that. Bob Moriarty, for example, he points out the everybody hates mining stocks, or nobody loves mining stocks. I forget the exact words that he uses, but that's really all I've got in this video. I just wanted to share with you why I had been looking at the large cap mining stocks, both gold and silver. It was because I wanted to see how they were doing before we looked at their performance relative to the overall market. Folks, if you've got any thoughts on this topic, I'd sure love to hear them. I'd love to hear that somehow I've got it all wrong and no, mining stocks are the place to be. That's not what I'm seeing, but if you've got a different perspective on this, please share it with me, and I'll look forward to talking to you soon. Let me stop sharing my screen, and I'll see you, folks.